Hello, good morning, everybody, and welcome to our morning market update and live trading room, the start of the live trading room here for Friday, October the 13th. It's a fairly gloomy day outside. I just had to look just so I didn't lie to you in Toronto, but it's still a beautiful day because we're alive. The markets are open. We're going to make some money. All right, we got a jam-packed calendar. We got a lot to talk about in this webinar. We're going to talk about the following in today's broadcast. We're going to talk about Bank of America earnings, what the European Central Bank said last night and how the market just completely shrugged it off. Oil prices rally big overnight. I'll tell you why. Bitcoin explodes to 5,900, and Donald Trump is about to do some pretty big historic things today. So we got a lot on the agenda. Let me just adjust the mic or the camera really quickly. Here we go. Apologize about some shaking if it occurred. All right, let's get started. In Asia, Japan's up 0.96%, almost a whole percentage point. Hong Kong's up 0.06%. 0.13%. India's up 0.78%. So markets, equities all across the board in Asia are higher. In Europe, London's down 0.17%. Paris is up 0.01%. We'll call that flat. Frankfurt as well is up 0.08%. That is also, for all intents and purposes, flat. So some strength in Asian markets, followed by some flat or sideways price action in European markets. But this morning, in the U.S. futures, Dow Jones is up about 0.06%. S&P's up 0.04%, Nasdaq's up 0.06%, crude oil is up 1.7% to 51.49. Crude oil is currently trading 51.70. The bid continues. That's the overnight high, and the open selling off a little bit here on the open. I'm short 2 lots on oil at the moment, trying to fade some of this downside with the trailing stop. It's working so far, and yeah, that's that at the moment. 10-year Treasury yield plus 2 basis points at 232.5. We'll talk about a big event today. The news of the day today was it might as well have been a Fed meeting at 8:30 in the morning. The CPI, this is the Consumer Price Index. This is the main measure of inflation for the Federal Reserve. Well, actually, the PCE is, but the CPI is a really good indication of it. The core number excludes energy and food. All right, so it's an inflationary measure, and it came out at 0.1% versus 0.2% expected. That means inflation is dropping. That's not deflation, that's disinflation. That's a reduction of inflation. That's what it's called. Economists love that term, disinflation. They drool all over it. So we're getting disinflation happening at the moment, and that's not good for the Fed because the Fed doesn't know what to do with inflation. They said clearly they're confused. So you know what? Inflation's low. It's not transitory anymore. A lot of Fed speakers are saying, look, we said it was transitory for 9 years. Now we can't keep calling it transitory because it's not transitioning to anything. So what's happening here in the market is that the market is starting to say, look, this Fed is either going to admit it's psychotic, in which case all bets are off, or they're going to start to say, look, our number one goal in life, and the whole point of this entire committee in Federal Reserve, the whole point it was assembled was to control or to help control interest rates through measuring inflation. That's their number one goal at their job, is to show up and to raise interest rates or drop them according to inflation, and to also help the labor market. And it's also their secondary, but their primary is inflation. Don't get it wrong. And they said, we don't know what to do with inflation. All right, all your jobs are gone. You work for me and you say, I don't know what to do with this. And that's your job. That should have been your job for decades. Peace. I have no more of you. But anywho, Janet Yellen is probably not going to resign. Neither will the Fed. The Fed's not going to end anytime soon. It's a private banking institution deep in the pockets of a lot of private, really wealthy individuals. Anywho, I'm going to cut that off there. Inflation was slightly lower. That sent gold prices higher, the US dollar lower, because that is a dovish occurrence at the end of the day. And now the question is, will there be a rate hike in December? The answer's starting to look a little bit more like no. It was 90% odds that we would hike rates. Now we're down to 70 as of yesterday. With this CPI, it's probably lower. So that is starting to get a little more dovish. Retail sales this morning came out slightly higher than expected, minus the auto sales. That's the core numbers. With auto sales lower than expected. So autos drag down retail sales. 8:30, we got Fed's Rosengren. He's currently speaking. 9 a.m., we have Janet Yellen's speech. 10, we have business inventories and consumer sentiment on the calendar. 11:30, we got Fed's Kaplan speaking. 1 p.m., we got the Baker Hughes rig count for oil production in offshore in the United States. And 1 p.m., we got Fed's Powell speaking. 2 p.m., we got a Treasury budget. It's going to be one heck of a day. This is a Friday like no other Friday. You could expect the market to move massive today, at least 6 points. Day traders get that joke because it hasn't really done much. It's been a slow grind and range-bound behavior with low volume, so it hasn't been exciting movement. Bank of America beats on their earnings this morning, so it follows in line with Citigroup and JP Morgan yesterday releasing. Bank of America also beats on Q3 revenue of 22.1 billion versus 21.9 expected. 21.9. Sorry, a little joke. Net income of 5.6 billion, and that's up 13% year over year. Earnings per share of 0.48 cents. 48 cents earnings per share versus 46 estimate. All right, FIC, which is fixed income, commodity, and currency revenue dropped 19% in line with what happened to JP Morgan yesterday as well. Credit loss provision spiked 15%. And I found this really interesting in reading through the statements and some of the analysis. 100 basis points in interest rate yields would benefit or drop the revenue by 3.2 billion over the following 12 months. So these banks have very strong exposure to the short-term side of the curve. So getting long a bank is like saying you think the Federal Reserve is going to hike interest rates. All right, buying put options on a bank is almost like playing the Federal Reserve not hiking. So a lot of people ask me, well, George, how could I trade the Fed if I don't trade futures? Well, I always say trade futures. That's a simple answer. But the more complicated answer is you can find correlatory markets to interest rates. Who has exposure to them? Primarily companies that are in the financial sector. All right. So there you have it. The ECB this morning, I'm going to go over this a little bit quicker, said that it's considering reducing its pace of asset purchases to 30 billion, all right, from 60 per month, but starting January of 2018, but extending their program almost double or much longer than the current end date of December 2017. Because when it ends in December 2017, the ECB is going to have to announce what they're going to do for the following few years. They're thinking of cutting their asset purchases, but doing it for a longer period of time. So in effect, in a net basis, it's not a massive change, but it's a psychology change that they're providing less liquidity and less support to the market. So they announced that. The euro didn't really care. It just shrugged it off, right? It was interesting to see that. German 10-year yields were fell rather to their lowest level in more than 2 weeks. So the German yields didn't like that. Bond prices in Germany, the Bund probably rallied. And the euro, it didn't really seem to care until this morning. The euro's biggest rally of the day was on the CPI data, and it was bullish. All right, why? Because it's dovish for the US dollar. So the US dollar drops, the euro rallies against it. The euro moves in line with equities. You guys need to know that. Gold usually moves against equities. But when it's Federal Reserve speak, gold moves with equities and against the US dollar. All right, simple correlations you need to understand that we teach you in the futures trading course. Oil prices this morning rally along with metal commodities. I'll tell you why. OPEC expressed optimism that the global oil glut will be cleared by the third quarter of the following year, so 2018 Q3. They think that the oil glut's going to somehow magically be cleared up. I don't see how or why, but they say that, and the market likes it, and it sends crude oil higher. After crude oil reporting yesterday, a little bit of a surprise draw of inventory, and then OPEC comes in and jawbones that side of the market, and it pops more, and that's just how it works. All right, and industrial metals, iron ore prices started to reverse after China imported 100 million tons in their latest report, smashing the previous record. Nickel rallies almost 10% in the London Metals Exchange this morning. Copper adds 3.3% onto the price. So really, it's been a commodities rally in the morning, and that's driven a little bit of excitement into the market. Money's pouring back into commodities, mainly gold, copper, iron ore is getting some short squeeze on the moment on Chinese import data. All right, so that's important. Bitcoin explodes to 5,900 after unconfirmed rumor that they may just back off this ICO ban and the Bitcoin exchanges ban. All right, and that really put some upside expectation into cryptocurrency. There's some really big funds starting to move into the space and purchasing it up as well. I think it's too late to get in. I got other places to put my money and other really great opportunities. Bitcoin doesn't really rank high because of its volatility, and it's not tradable volatility. It's volatility on weak volume. It's low opportunity. High volatility doesn't mean opportunity always for traders, because high volatility could mean you have your stop loss and it gaps your stop loss and you lose $20,000 instead of the planned $2,000. That sucks. Donald Trump this morning signed an executive order to scrap Obamacare insurer subsidies. This was billions of dollars that these companies were receiving in terms of subsidies. Insurance premiums are probably going to go up because of this, most likely. There was no transition period. It was immediate. He just said, I'm cutting this off right now. So he kind of cut that support. And then later tweets, Obamacare is imploding. massive subsidy payments to their pet insurance companies has stopped. Them should call me to fix it. It's kind of like a ha-ha, call me and we'll talk maneuver. Very classy. Speaking today at 12:45 p.m. on the Iran nuclear deal, he's not expected to certify that they're in compliance with the 2015 accord. So look for that. It's 12:45 p.m. the speech. And then that ultimately puts it up to Congress to decide whether to kill this deal or not. But he's just going to say, I certify that they're not compliant with what we set forward in 2015, Obama's deal with Iran. All right, so a lot of news, a lot of developments. Bitcoin strong, equity markets look to be strong. Trade to fresh all-time highs overnight, but on weak volume. Gold is strong. Look for opportunities to get it long. I've been trying to buy the 82s from below. I had a few day trades on gold. I haven't got a chance to get my long entry into a swing trade yet. And the more I chase it higher, the less likely I'm going to become to get filled, because at some point you just missed it, and you've got to admit that to yourself. You got to be good at admitting the, oops, I missed it. It's like if a train passes a train station or a bus passes a bus station, are you going to chase the bus? Maybe for like 2 seconds. Then when you realize he doesn't care about you and he continues to drive in the cold and even flashes 4 ways to say, ha, you're stuck waiting for the next bus, what are you going to do? Keep running? You're not. You're going to just say, forget it. I'm going to wait at the bus stop and see if another one comes. If it does, great. If not, there's always Uber. That's my crummy analogy of the day. I'm going to start a segment, crummy analogy of the day. Any questions, comments, concerns? Let me know. Please like, share, subscribe, and share this video. And I invite you guys to come out to our day trading room. We do this every day live, 9 a.m. to 11 a.m. It's more than just, oh, here's what's going to happen. You guys are on your own. We trade together. We set levels. We do real-time analysis. We see where there are buyers, where there are sellers, where there's accumulation of strength, when the balance is changing, when there could be reversal levels. We follow gold, silver. We follow bonds, NASDAQ. We follow Dow, DAX. I'm just trying to think of all the stuff we follow. We follow a lot of markets and set up trade opportunities throughout the day that you may not see trading by yourself. Our members contribute as well, and they provide some feedback and analysis and some trade ideas. So really, trade in a group of people, and that group of people is waiting for you. They're trade pros in our trading room. Check it out. Go to TradeProAcademy.com, and we'll see you guys in the room. Trade pros, let's open up the room now. We got some levels to set and some trades to plan. YouTube, see you on Monday. Have yourself a great weekend. Don't get in too little trouble, but not too much either. I still want to see you on Monday, for goodness sake. All right, survive until then. Take care. Have a good weekend. See you Monday. Goodbye. Patented chair spin.